Hi everybody and welcome to today's event where we have the pleasure to present OrderYOYO, and I might also say welcome to AppSmart. To help us through today's presentation we have the CEO Jesper Johansen, CFO Jesper Hylleved, and the CEO of AppSmart. Very welcome to you also, Mathias Thorn. The reason, of course, not anyway to hide it, today's merger of two of the leading suppliers to the takeaway industry software solutions in Europe are merging. So of course, probably a very happy day. I guess the presentation we will go through the details, but also of course look a little bit into what this will create of a new company and which possibilities and strategic rationale. As always, ask questions down in the box down below. We will run through a presentation and take the questions afterwards, and we will run through it with our cameras shut. But when we come to the questions, we will of course turn on the cameras again. But Jesper J, I think I will hand the call over to you now.
Yes, thank you, Michael. Good afternoon, everybody, and welcome to this presentation on our merger with German AppSmart. As Michael said, I'm Jesper Johansen. I'm the CEO of OrderYOYO, and I'm here with Jesper Hylleved, our CFO, and a warm welcome to Mathias Thorn, who's founder and CEO of AppSmart. And you're right, Michael, today is a fantastic day for us. We're here today because we this morning announced our merger with AppSmart. When we presented our annual report on March 22nd, we introduced a more active consolidation strategy. We also presented that as we believe very strongly in local market leadership, so merging with local market leaders as a very attractive growth path. And today we are doing exactly that. So today we'll go through the strategic rationale for our merger with AppSmart. Mathias will present AppSmart in more details, and Jesper will go through the transaction structure and financials of the merger. Slide 2, please. I will pause just 30 seconds here for these important disclosures. So just 30 seconds and we'll go on. And with that, Michael, we can go to slide 3. So OrderYOYO was founded back in 2015. Until 21, we have focused on growing organically, as you know, and we're building market-leading positions in the UK, Denmark, and Ireland, reaching around 5,000 restaurant partners. Today, we add 2 more market-leading positions to our European presence in Germany and Austria, and we are now servicing more than 9,000 restaurant partners. Our strategy is to continue our growth path both organically and through consolidation, and our vision is to serve more than 25,000 restaurant partners in 2025. Slide 4, please. Now, why is our first merger on our growth path with AppSmart? Simply because AppSmart and OrderYOYO is a perfect match. We share the same vision of liberating restaurants, helping takeaway restaurants to claim back their own customers. We focus on the same market segment and have done from day one, quick service restaurants, and we have the same go-to-market model. We both believe in local market leadership and a direct sales model. And then we complement each other perfectly. We as market leaders in UK, Ireland, and Denmark, and AppSmart as market leaders in Germany and Austria. Slide 5, please. We complement each other from a product point of view as well. Both our companies are based on the online ordering shop system as a foundation, and on top we have 2 complementary products. OrderYOYO has a strong marketing product and AppSmart a strong POS system, leaving cross-sales opportunities for both companies. So this is undoubtedly a perfect match and the perfect first merger for OrderYOYO. And we are very, very happy to announce this today. I'll now hand over to Mathias to present himself and AppSmart. So if we turn to slide 6, the word is yours, Mathias.
Thank you, Jesper, and good afternoon from me as well. My name is Mathias Thorn, and I'm CEO and co-founder of AppSmart. I'm an experienced tech entrepreneur with an IT background. In 2014, I co-founded AppSmart with the same idea as OrderYOYO, to liberate the restaurants and make them economically more efficient with a clear focus on quick, quick service restaurants. Today, we service more than 4,000 restaurants and partners in the DACH region. We have more than 120 employees and are in the Frankfurt area in Germany. From 2019, we had a very strong growth of 81% per year, ending up at 53 million DKK in annual recurring revenue in 21. Slide 7, please. Like OrderYOYO, we focus on claiming local market leadership. We are number 1 in Germany and Austria, and we also initiated the market entry in Poland and Switzerland. Slide 8, please. This is our product offering for delivery restaurants. Similar to OrderYOYO, the core offering is an all-in-one solution as app and web shop system. In addition, we offer a point of sale, POS, and digital infrastructure, which is tailor-made for the demands of quick service restaurants. This concludes my presentation on AppSmart. I will now hand over to Jesper. Slide 9, please.
Thank you for that, Matthias. So just to reiterate what we are creating here, with this merger between OrderYOYO and AppSmart, we create the European market leader, a European powerhouse servicing more than 9,000 restaurants. We will have market-leading positions in 5 countries, including the 2 largest takeaway markets in Europe, UK and Germany, from day one. So a true powerhouse to build from. Now also Jesper, who will take us through the transaction structure and the financials. Slide 10, please.
Thank you, Jesper. Please let me give you an overview of the transaction itself. In regards of the transaction and financing, the transaction will combine the 2 companies in a transaction where OrderYOYO will acquire AppSmart, and where the AppSmart shareholders will become shareholders in OrderYOYO. The payment to the AppSmart shareholders consists of 29 million shares in OrderYOYO and 22.3 million DKK in cash payment. Based on the last closed OrderYOYO share price, this values AppSmart at 222 million DKK. The share payment of the transaction will be settled by issuing new shares. These shares are subject to lockup. The cash payment is funded by already available cash within OrderYOYO. That was the worst on the transaction details, which bring me to the expected completion. We are working towards and expect closing to occur on July 1st, 2022. Finally, let me elaborate shortly on how we will operate post the transaction. Firstly, both of the OrderYOYO and AppSmart have strong brands that we will keep in all local markets. Secondly, the AppSmart founders will both take significant leadership positions within the combined company. Slide 11, please. Let us have a closer look at the size of the combined company. As you can see, we are combining 2 fast-growing companies. OrderYOYO delivered December annual recurring revenue in 2021 of 120 million DKK, while AppSmart delivered a December annualized recurring revenue in 2021 of 53 million DKK. With this merger, the combined pro forma annual recurring revenue for 2021 is 173 million DKK, thereby increasing the total size of OrderYOYO with more than 40%. Now, let us have a look ahead and into our guidance for 2022. Slide 12, please. So our updated guidance shows an annual recurring revenue, December annualized, between 175 and 190 million DKK. This corresponds to an increase between 45 and 58% compared to our reported standalone 2021 annual recurring revenue, which is primarily driven by the addition of AppSmart. Our guidance on GMV, again December annualized, is between 2.05 billion and 2.2 billion DKK. Our guidance on net revenue is between 135 and 150 million. Here it's important to notice that this only contains 6 months of AppSmart activities, and that the guidance is depending on closing by July 1st, 2022. Our EBITDA guidance is between -10 and 0, as we do expect and have incorporated integration costs into our guidance. So by concluding on our guidance, my part of the presentation is over. Now back to you, Jesper. Slide 13, please.
Thank you. Thank you, Jesper. So last slide. In conclusion, we are with this merger taking the first step towards our overall ambition to build the by far biggest European company within our industry that is to have liberated 25,000 restaurants in 2025. Our strategy, and we call it 25 in 25. And with that was our short presentation on our AppSmart merger. So if we move to the next slide, please, we will open up the call for questions. And we'll, I assume, put on our cameras.
Thank you, Jesper and Matthias. The first question here is, do you expect further consolidation in the near future? You kind of elaborate a little bit on it, that's your new strategy to look at consolidation also. So is there something in the near future that is lying in the cards?
Thank you, Michael. Let me answer that. And we probably need to define near future. But obviously, this merger is for both companies a very big step, and it's a big merger for us. So I do think that we on both sides will have our hands full with making sure that that this merger is running smoothly and is integrated in the right way. So in the near future, as tomorrow or within the next quarter, I do not foresee anything additional consolidation, but there's no doubt that consolidation is part of our strategy, and actually it also I guess was for AppSmart and is for AppSmart. We believe that there around Europe are local market leaders and technology that can be consolidated, and we have the vehicle and the size to do that, and with this transaction we also show that we can do that. So I do foresee that we will pursue on this path, but whether something comes tomorrow or next quarter, we will work on this to integrate, but obviously if there is a transaction possibility, we will act on it.
And a little bit out of this scope, how is the UK market going right now? We are, all the economic news out of this country might not, show the best trend.
Okay, yeah, yes, just switching the brain. Good question. Let me start, and then Jesper, you can add. There's no doubt that the UK market, as we all read, is under pressure. The restaurants, our customers, are definitely challenged over that. I remember when we talked during COVID about how important our service and offering was for the restaurant, because of the problems or the big part of their profits they were giving to portals. We thought it was big under COVID. It's become bigger. We have not been more relevant for the customers and restaurant partners as we are right now. There's no doubt that there's a lot of headwind in the UK. End users absolutely see that their resources available is really falling, I think it's tough over there for normal residents, and this also affects us. We have to help our restaurants even more, and we do that on a daily basis. But it's tough for our restaurant partners. Jesper, do you have anything to add?
Yeah, just confirming what Jesper just alluded to, and then saying that yes, we do see changes in purchasing pattern within the UK market, but nothing that makes us change anything in terms of still strong belief in the UK market, and we do also see positive things in the UK market, despite the fact that the end users are struggling. That's visible in our numbers, but nothing that makes us shake. We still firm believers in the UK market, and also in the short terms.
Perfect. There's a question here. Does the negative guidance, does the new guidance include a negative growth rate year on year of OrderYOYO or AppSmart?
Does the negative guidance? Okay, I think I get the question. I think it's important that we don't guide on OrderYOYO or AppSmart. We guide on the combined entity. As you can see, we are guiding 175 to 190 million on ARR. This is slightly above the combined entity in 21. So in total, we do expect actually growth from 21 to 22. But there's no doubt that we as making guidance for a new entity that we are just integrating, we do want to make sure that we are comfortable with the guidance we're giving. So in total, we see the company growing.
Perfect. And there's a question here around the purchase price of around 7 times net revenue. The question is, it sound very expensive, much higher than what you are trading is. What is the reason of AppSmart being higher valued than OrderYOYO?
I have to correct that. It's not higher. We are actually trading this more or less at the same multiples. What I think can be a little problematic is if one is deducting the net revenue based on the numbers that we are giving, because then you only have half a year of net revenue in AppSmart. But the multiple based on ARR are more or less in line with our guidance. Sorry, with our multiple.
So if you base it on the 2021 ARR, it kind of gives around the same.
I think we have the numbers right. It's 222 divided by 53, which is around 4. Yeah, and then we are trading around 400 and have 120, so that's 3.6, 3.7. I mean, I wouldn't say that's a big difference. So Matthias's position in Germany has been of strategic importance for the combined entity. So he had a slightly higher valuation than the buying company, so to speak.
And then there's a question here for AppSmart. Is it profitable? And I guess you mean either operational or down on the bottom line. I don't know whether you want to give those details.
Let me just, I mean, obviously, I would very much like Matthias to answer, but we do not want to give details at that level on the subsidiary level.
And then there's a question. What is the revenue split between online ordering and POS sales for AppSmart?
Yeah. Again, I will let Matthias just talk a little bit about POS and the product there. We do not guide on the segment split yet. So Matthias, you cannot give the exact split on the revenue side, but I think you should tell a little bit about the POS system and what it does for you. Yeah.
Yeah, thank you. Yes, the POS system is a very important product which we added a couple of years ago, as we started also with the shop system. And the POS system is, first of all, a very strong instrument to bind the customers so they not so easily churn, because once a POS system is installed in the store, it's really hard to change it because of a lot of effort to do that. Second of all, we have a lot of insights and can collect a lot of data. How do we perform compared to our competition? Because a POS system also receives all data from as an API from, for example, Takeaway or other competitors. So this is something which is really interesting, yeah, we have and it's really good to bind the customer.
So do you have some
elaborate a little bit on what we want to do with POS, because obviously this is something that we obviously have thought about for basically since we founded the company, and we think that it's the right time for a company like ours also now to be able to introduce that to our customers. So we are actually the POS system that AppSmart has will be adjusted so that we can use it in the UK, Irish, and Danish market probably during Q3.
And will that be some equipment sale, or is it only the software lying on the POS system?
We typically both. There's a little more equipment when you do POS. Matthias, maybe you can elaborate on that without going into details.
Exactly. There is equipment we do on that, and we sell hardware to all of that, and a lot of customers also take this hardware, which we are also capable of selling.
Then there's a question again to the guidance. Isn't this a de facto negative adjustment of the previous guidance in the higher bracket of your increasing? You're increasing by 20 from 170 to 150, but acquiring of 50 million. Can you kind of bridge that? I know you don't want to look at the company as two separate units, but if you can elaborate a little bit on that.
I think it's important to exactly start looking at the combined company, because we do not guide and don't want to go into guidance discussion on the two different companies. But when that is said, I understand the question. I think that there's a couple of things that need to be taken into account here. One is that obviously in our old guidance there was some German revenue included in that is now basically will be taken out and now be part of AppSmart revenue, so to speak. And then, as I said before, we have been very focused on making a guidance that we believe in the combined company, also taking into consideration that we now need to integrate these two companies, and there will be a lot of internal work on that during the second half of 22. I can say though that we as a standalone company, OrderYOYO would not have made a downward adjustment, if that is a question. Or said another way, that we're on track to our guidance, to the old guidance.
And there's a question here: can you elaborate on the solutions and how synergies, i.e. the POS systems, are present in the OrderYOYO market? Is it simply that you will roll out AppSmart solutions into your markets with some kind of a rollout plan?
Yeah, sounds easy, but nevertheless, that's what we want to do. As Matthias said, and I'll let Matthias talk afterwards just a little bit about what's the difference in selling a POS system and a shop system. I think that's actually interesting just to get Matthias's view on. But in general, what we want to do is we want to adjust the POS system from AppSmart so that it fits the markets that we're in, and then we will start selling that obviously to our current clients and offer that as an add-on to their current solution. And obviously will also, when we go out and chase new customers, will be in the suitcase when we are selling. I think this product, as Matthias says, is very much to do about churn prevention, especially for the larger restaurants. So we will obviously focus a lot of our energy there. But it's a little different way of selling, and you need a little different selling style, so to speak. And this is actually why I'm so happy that we actually are joining forces with AppSmart, because they can learn us how to do it. And Matthias, maybe you can just elaborate a little bit about the difference on how you sell a POS system versus a shop system, because it takes a little longer to sell a POS system.
Yeah, indeed, that's true. So usually this market, POS market, is already good settled, but very high fragmented. And the difference is current with the POS that we need a little bit more effort in that. Selling it costs a bit more effort because it's a product which you need to explain a bit more. But we are pretty successful with that, and if we sell it, then the customer is very happy with that. And about exactly the selling, the difference is that it's more helping the customer with economical advantages. This is the way how we explain it, for example, in how we can improve his digital infrastructure, improve his processes, and integrate a lot of stuff. And where there is a in Germany, There's a lot of shop system competition, for example, and then they have a lot of devices, and combining this device, for example, is a great benefit. So we really work with digitalizing and making the benefits very strong to make the restaurant more effective. Yeah.
Perfect. There's a question here. Do you still have plans to expect to expand in Sweden as communicated?
We have plans to expand in several other European countries. Again, we would like, and Sweden is one of them. What the sequence is, so when we enter Sweden, or Norway, or Holland, or now we actually have a little foothold in Poland, is much to do with obviously the analysis that we're making. So we start with a basis assumption analysis of the attractiveness of the market. And then it has a lot to do with the opportunities to consolidate in these markets. So whether we start with Sweden and then we do Netherlands, or we do Poland and then we do Belgium, is not carved in stone, because we need to be able to adapt quickly, and that's what we can. But we definitely want to go into other European markets and not just Sweden. We want to be number one. We are number one in Europe now, but as you know, this market is moving all the time. But we want to keep that position. And with 25,000 restaurants in 2025, which is in 3.5 years, obviously we need to keep the pace on what we're doing here.
There's a question here. Which cost synergies do you expect from the merger?
Yeah, let me answer that, and then you can maybe elaborate a little bit, Jesper. This is not a cost-driven merger. This is a very complementary merger where we get access to different markets and different products. So it's mainly a value and market-driven, revenue-driven merger we're doing here. Now, when that is said, obviously there's a lot of efficiency to be gained, starting with us learning from each other. The unit costs in R&D is obviously an area where you can work a lot. I mean, we don't have at the end to have two different shop systems, online ordering systems. We can do with one. So there is obviously cost synergies in this transaction, but it's not the driver, and there's not cost synergies included in the guidance that we have. Jesper, a little bit more.
Yeah, just confirming what Jesper is saying, and then adding that I think that the cost synergies in this combined company setting is to be seen on the long term. So no short term cost synergies. The cost synergies is built in our growth plan for the coming years. So looking at it as two standalone companies, we would have had higher cost. Now we have the ability to actually grow for less, and that has been critical for us to actually have a growth perspective, but do it profitable. That's key for us.
Then there's a question: how does your earlier transaction with HAPS, I think you bought a Berlin-based smaller player in the German market, how does that fit into this merger?
Yeah, okay, let me answer that perfectly. To say it easy, I mean, HAPS was a very small transaction compared to this. HAPS was very much about technology and access to research and development resource that we value and are using very, very dearly every day in OrderYOYO. As you know, we were talking of around 100 restaurants, so from a market perspective, it wasn't big. The R&D development is actually one, or the R&D part is actually one area where the two companies very quickly will start working together, and the R&D is scattered in different locations, so they will just fairly smoothly move into the combined entity, and it's not going to be an issue. I would say the good thing that HAPS, besides good employees, gave us is actually also the German market is difficult to do transaction in. So we learned a lot that we could use when we started discussing with a much bigger company like AppSmart, and we needed to do that to be comfortable doing what we did here. So in that sense, it was also a very good first transaction.
A short question: what is the AppSmart geographical revenue distribution? Was that what you showed on the screen there with the 95%, or is that the customers?
That if you go, I mean, yeah, there is. That's the AR.
That's the analyzed. That's the revenue split or the ARR split.
AR split.
The multiple on ARR doesn't make sense to compare with since it's only for 1 month sales, December. You expect 15 million DKK revenue second half of 2022. Implied your net revenue expectations is 15 times 2, simplified 30 million. That gives approximately 7 times revenue. So it's regarding the old question whether you could use this. Is there anything that is valued like that? I don't know whether you want to give some color to the earlier answer.
I can only say the same as I said last time. The 7x is not correct, but and I can refer to the way that we are looking at it, which is an ARR, which is for 21 December as ours are, yeah, this is not a transaction where we have paid more than our own multiple.
Then there's a question: does AppSmart have higher or lower churn rate than OrderYOYO? I am not sure whether you want to give these details, but now I ask the question.
No, let me answer this. I think that in terms of restaurant churn, it's fair to say that AppSmart has lower churn rate than OrderYOYO, and I think a lot of this is contributed to the fact that AppSmart has a POS system. So from a restaurant point of view, local churn is lower, and the MRR churn is actually for the two companies more or less the same. I think we had in our annual report we did show annual MRR churn of around 3 to 4% yearly, and it's the same for AppSmart. So in terms of revenue churn, MRR churn, both companies have low churn. And
to finish off, I think our time is running out. That there is of course someone questioning that if you have a 55 and 140, which was your low end of your guidance, you're not reaching that by the 190. Do you want to give some more color to it than you are baking the two companies together, that you want to be sure that the integration is running and thereby guiding about that? There is some question saying, at your high end of your new guidance is not, combined with your old bottom guidance for revenue.
Yeah, I can only refer to what I said before, that we're looking at this as a combined company, and the combined company is guiding what the 175 to 190. Again, of the 140, one needs to remember that part of that was German revenue that is now not in our in our part of the business plan anymore, but will be in the German part of the business plan. And then again, as I said, we want to make sure that we are comfortable guiding for the combined entity going forward and going into a period where we have to integrate two relatively large organizations.
Perfect. I think we are running a little bit over time. Thank you, Jesper, and thank you, and enjoyment to meet you, Matthias. Hope to hear from you more in the future also. And thanks to everybody listening in and for good questions. And everybody have a nice weekend.
Thank you.
Thank you.
Thank you, everybody. Bye-bye.